Good morning, folks. My name is Brian Baker, Rail Logistics Specialist here at PFL. We hope that everyone had a great weekend. The Dow closed higher on Friday of last week, up 203.72 points and up 508.39 points week over week. The S&P 500 closed higher on Friday of last week, up 14.7 points and up 92.15 points week over week. The Nasdaq closed higher on Friday of last week, up 31.28 points and up 473.2 points week over week. In overnight trading, Dow futures traded higher and are expected to open at 36,288 this morning, up 73 points. Crude oil futures rebounded strongly on Friday as President Biden stopped short of announcing a release of strategic petroleum reserves, the SPR, to counter the OPEC Plus decision to stick with a planned 400,000 barrels per day output hike in December, when he has been asking for more to reduce gasoline prices here in the United States. In our opinion, it would be a waste and only a short-term bandage, so to speak. The SPR was set up for emergencies and should be not used for short-term price control. OPEC Plus knows this, and they are thinking long-term. Adding fuel to the fire, Chinese inventories have fallen to a 4-year low amid weak buying on behalf of the Chinese, with Chinese refiners hitting 3 consecutive month-on-month declines in overall seaborne crude imports, down to 8.3 million barrels per day in October. Utilization of nationwide inventories have dropped to their lowest since 2018 at 58%. The bottom line is, a short-term burst of oil out of the SPR really is not going to accomplish too much. If we want price control, we have to produce more here at home. It is that simple. We believe that despite all the headwinds facing the oil patch, that increased production is inevitable and will happen sooner than you think. West Texas Intermediate crude closed up $2.46 on Friday of last week to settle at $81.27, down $2.30 per barrel week over week. U.S. commercial crude oil inventories increased by 3.3 million barrels week over week. U.S. crude oil inventories are 6% below the 5-year average for this time of year. Total motor gasoline inventories decreased by 1.5 million barrels week over week and are 3% below the 5-year average for this time of year. Distillate fuel inventories increased by 2.2 million barrels week over week and are 5% below the 5-year average for this time of year. Propane-propylene inventories increased by 400,000 barrels week over week and are 14% below the 5-year average for this time of year. Propane prices continued to decline week over week, down 11 cents per gallon, as we continue to build stock when we would normally be reducing stocks. This is good news, but stocks are still historically low for this time of year. On the LNG front, prices fell for a third week in a row, trading below $30 per MMBTU in Asia, and natural gas prices here at home also closed lower week over week. As of the writing of this report, WTI is poised to open at 82.46, up $1.19 per barrel from Friday's close. Total North American rail volumes were down 3% year over year in week 43, resulting in quarter-to-date volumes that are down 3.8% and year-to-date volumes that are up 6.7% year over year. 5 of the AAR's 11 major traffic categories posted year-over-year decreases, with the largest decline coming from intermodal, down 8.7%. The largest increase came from metallic ores and metals, up 26.2%, and coal, which was up 13.2%. North American rig count is flat week over week. The U.S. rig count was up by 6 rigs week over week and up by 250 rigs year over year. The U.S. currently has 550 active rigs. Canada's rig count was down by 6 rigs week over week and up by 74 rigs year over year. And Canada's overall rig count is 160 active rigs. Overall, year over year, we are up 324 rigs collectively. International rig count, which comes out monthly, is up by 13 rigs month over month and up 144 rigs year over year. Internationally, there are 800 active rigs. Folks, in case you missed it, scrap prices came out on Friday of last week for November, and they were up. What this means is that PFL can pay more for rail cars delivered at key locations across the country. See the report and call PFL for further information. Many of you may not know, but PFL pays cash for unwanted rail cars. Call PFL today for competitive pricing and reserve your spot in line. Booking a spot in line is paramount. Call PFL today for further details. The reading of PFL's rail report today is an absolute must. We talk about Canadian crude inventories and basis numbers, domestic retail propane prices, skyrocketing scrap prices, and we can pay unwanted cars, a bunch of key academic data that we think you will find of interest. We also summarize the latest petroleum by rail numbers, talk about refinery runs, overall petroleum imports and export numbers, and dive into the latest U.S. employment situation. Bottom line, a lot of great information and a lot of fancy graphs and pictures. We hope that you enjoy reading it. PFL's rail report today. We do it all for you folks. PFL has been extremely active in railcar storage, return on lease strategies, subleasing, mobile repair, and